Okay, thank you for coming to this session. This is Raju here. Today, the topic we are going to talk is taking full advantage of precise trading zones. Okay, and do take note that this is going to be live trading because signal, and also do note of the risk because when you take live trades, you have to be aware of the risk versus reward, and please take your trades with the stop loss in mind and profit target in mind, right? And stick to your rules. The crosses which we would be mainly focusing in are mainly all these crosses. You can see like USD crosses against all the majors, in fact, and you can ask questions pertaining to any one of these crosses against each other, right? Use this session to do a discussion because it's going to be a group discussion. So the more the question you ask, the more we can discuss and we can learn as a group. And also do take note that the tools we use to get these numbers that we produce the report, we use Fibonacci, we use Andrews Pitchfork, moving average, trend channels, and Gann numbers. Okay, and you must also be aware that price is a king, right? And you have to be take note that the price has to turn on certain levels or certain price levels, because end of the day you must understand that this is all done. Trading is done by humans, so as a result, there is emotions and greed taking place, and that's where you can see the market turning on certain levels. Okay, the trading tips which I'm going to talk about today is, in fact, the previous two already spoken about. Trend is your friend, and last week I spoke about buy the valley and sell the peak. And today the trading trend which trading tips which I'm going to talk about is first entry for the day is critical, right? So plan your trade. The reason why I'm giving you this trading tip is because you must understand the fact that most of the guys who are coming into this business, you must accept the fact that it is got to do with a lot of emotions, right? The more you control your emotions, or the more you control your greed, then the successful you would become, right? And of course, the first entry, the reason why I mentioned this is the first entry for the day, especially if you are a scalper or a day trader, is because the first trade, if it goes on the wrong, meaning in the sense, let's say you take a trade, and if you put stop loss and if you are stopped out, then when you take the second trade, a bit of nervousness would be with you, meaning in the sense because you have already lost money or you have already been stopped out on the first trade, so the second trade might be a bit nervousness which would be controlling you. So and if let's say your first trade is a winning trade, also you would be because like the moment you made money, you feel that like as if like you're invisible, or so the reason is the greed comes into picture, right? So as a result, the first trade you have to remain calm. At the same time, you have to take your trade with a specific game plan and with a stop loss and a profit target in mind. So this is the thing you need to take note, and this is the trading tip which I'm giving you for today. And if you notice today, let me go back and show you the screen. The markets are quiet because being yesterday US holiday, and in fact today the US are coming into picture, and there are few data out from the US, right? And do take note that I think the market would start to move when Europe comes into trade. So the net change, in fact, for most of the crosses is pretty flat. When I say flat is when the market is trading within 30 to 40 pips from the net change from the previous close, then I would consider it as flat. So here, if you notice this, Euro USD, which is trading net change, which is about 20 pips, Pound USD about 20 pips, Swiss franc is about 15 pips, dollar yen is 5 pips, so on and so forth. So overall, you see all the crosses are flat compared to yesterday's close. And also, if you feel that you see that the strongest and the weakest is, in fact, what I feel is the dollar yen, which has been quite strong, but it is within the zone 1 levels. So as a result, whenever the price is trading within the zone 1 levels, you have to take note that when the price is within, price tend to be choppy, and we only start to trade, or it is best for you to trade once the price moves out of zone 1 levels, because that's where you know that okay, the price has started to move. So and on that scenario, the chances of you being stopped out is quite slim, right? So and also do ask any questions. You can start asking questions, because as a result, as I told you early on, uh, since the market has been quiet, if the market is moving, then we can look for possible trades and viable trades. But right now, as it is, since US is not back, so chances are it is going to be quiet. And we also believe, we only want to trade at the market, meaning, we don't believe in taking trades when the market is quiet, because when the market is quiet and choppy, especially if you are being an intraday trader or scalper, chances are you might be stopped out. Okay, while we are waiting, please ask your questions. While we are waiting, maybe what we can do is we can discuss on our report. Like as I told you early on, use our the zone levels, because when you trade on the zone levels, chances are you may not be doing the wrong thing. Okay, let me show you the just quickly, just about 2 to 3 minutes. I'll just run through the report, so at least you can get yourself known how to look at the report. Okay, let me show you the screen. Excuse me. Okay, in fact, the report which I'm going to discuss today is New Zealand US. The reason being is because this report is ready. So I'll just show you what is so special about this report and the zones. Okay, you start off the day by looking at the previous close, which is the New Zealand USD. Okay, the previous close was 69.65. So we use this level as a benchmark, right? So what we do is, when the price is trading below this level or along this level, then we know that the market is quiet or is moving sideways. So we wouldn't want to take trades, because the price is going to be choppy until it breaks out from the specific zone levels. So you look at this trend levels we give for 3 different types of trends. We have hourly, daily, and weekly. So you can use the trend directions and use it to take your trading decisions accordingly, depending on what kind of trader you are. So if for scalpers and day traders, okay, you can use on the hourly trend should be more or less sufficient. And we do have a level, a benchmark level for that trend to hold. I mean, for that trend, if you feel that the price is going to go up or down, we need to have a specific level for you to see a benchmark. That means once the price breaks that level, then you know that the trend has changed or reversed. So on this hourly, we say sideways, while 68.60 holds. So meaning right now, I think the New Zealand is trading about 59.80, which is about 100 pips away. So as long as this level holds, we know that the price is expected to go up gradually, but it's sideways, meaning in the sense the market has not given us any direction, right? So we have to see, but overall, I think the buying pressure should be intact. And as far as the daily trend is concerned, it says corrective down while 71.20 holds. So basically what it's telling you is that the daily trend has been down. So since you see a red color, you know that the price is coming down. But 71.20, meaning when we say corrective down, that means, the daily trend has been down, but towards the end of that down move which is going to happen, that means the daily trend can reverse up or turn up anytime soon. So if you are bearish, then you have to be cautious when we say that, it's corrective down while this level, and of course this 71.20 is the benchmark level for you to hold, to see that the current downtrend is valid. And as far as the weekly trend is concerned, it's also sideways while 73.10 holds, which means that the two higher time frame are telling you that overall it is a selling scenario, but cautious approach is needed because this daily trend is towards the down move. So after you have seen this, the trend. So more or less you should tell yourself or get yourself prepared what is to be looked forward to and how to trade this market. So here after you see this, then we what I would suggest is go to under this economic calendar, whereby you see important data announcement, because being a scalper or day trader, you need to be aware that try not to initiate any trade when there is any important data announcement. So these are the key data announcement and the time. And of course, to get a full calendar, I suggest you can get a printout of your calendar and keep it and track by your track for yourself. Okay, let me go to this section 2, which is where it tells you what is to be look forward, or how can you take your trading decisions. So on this New Zealand USD, we have a market summary, which is history, which is what has happened from our report the previous day, and the section or the category which you have to pay attention are the trend, daily patterns, and today's strategies. In fact, the trend is the hourly oscillators are bullish but weak, and the price is within the moving average. So cautious approach is needed for the bulls. So hourly trend is sideways while 68.60 holds, and daily trend is corrective down while 71.20 holds. So expect the price to be choppy and the upside may be limited. So if you take note that earlier on I said that the hourly is sideways with 68.60, which means that the hourly trend is having a buying pressure. So even though the hourly trend is having a buying pressure, so we say that upside may be limited. So what you should be doing is, if you are bullish or if you are looking for a buy, any quick trade, you have to book your profit. And daily levels, this levels are the boundaries for the day, right? So you can expect the highs to be highs and lows to be in any one of these levels or within this levels. So we can expect like 70.65 or 71.10 or 71.55 in the event if it goes higher. And if it goes lower, the lows for the day can expect to be like 69.25 or 68.80 or 68.05. These are the levels you can use as a boundary for you to see when the market moves to these levels, that can be also a trading opportunity. And as far as these patterns are concerned, these two categories are the most important for you to take your trading decisions or put your trades. So this daily trend was within prior days range trading. The hourly trend was also been in a range trading, so expect a choppy session until the break. And 69.45 and 68.80 are the critical levels to watch to maintain the bullish outlook. So overall, we are saying that if you are bullish and if you feel that the price is going to go up, the price should not trade below these two levels. So you have to pay careful attention when the price reaches these levels, or it can be a trading opportunity as well. And on the 5 minute is along the gradual up channel, and the price patterns are suggesting the upside may be limited, and the opening price principle are mixed, so cautious approach is needed. So overall, we are saying that you have to be cautious, because as I told you, US has been on holiday yesterday, and most of the Asian markets are on holiday, like we did to Chinese holidays, Chinese New Year. So you have to be cautious, because market is going to be pretty thin until the US and the Europe comes into picture. And these are the levels you can pay attention if you are bullish or you want to book your profits. If you have shorted, the bullish levels are 69.35, 68.80 and 68.35. And if you are bearish, then you can book your profit if you have bought any one of these levels, or you can plan to take a trade to short at any one of these levels, which is 70.30, 70.70 or 71.20. And we give a trading tips provided if there is a signal. Today's strategies are conservative traders, you have to be sidelined or strictly trade on the precise traders report levels, and aggressive traders, you have to trade at the bulls and bears levels only, because since the market is trading sideways, you have to take note that it is best for you to trade when the price hits any one of these levels, because if it's going to be a range trading, then chances are the market is going to drag on for some time along that levels. After you have read this, more or less you should get yourself prepared. Okay, on this particular market, okay, what I have registered is the hourly trend has been with a bullish bias, meaning the price is expected to move slightly higher, but I have to book my profit whenever I get about 30 to 50 pips. That should be my game plan for this particular instrument. Then after you have read that and more or less you have mentally prepared, okay, what is to be looked forward, then you start off the day by looking at where is the price trading or where is the last price trading. And in fact, the last price is trading right now is 69.90, right, which is about resistance zone 1. So we start off the day by looking at where is the last price trading, and you get yourself prepared to take your trade. So whenever the price is trading within the no man's zone, we call it resistance zone 1 and support zone 1. So if in the event, if you feel that the price is trading at, for example, let's say about 69, 70 or 80, then the price falls into a no man's zone. We wouldn't want to initiate any trade because we know the price is going to be choppy if you are a conservative trader, because a conservative trader, usually you put your stop loss about 30, 35 pips, right? So if you are aggressive trader, then you can trade within the no man's zone, but your stop has to be below the support zone 1 or above the resistance zone 1. So whichever, the trade directions which you plan to take your trade. And also do take note that most of the day high or the day low would happen within our resistance zone 1 levels, right? And maybe, sometimes it may happen at resistance zone 2 levels, and seldom the price goes beyond the zone 2 levels. So if you feel that the low has happened at let's say for example at 69.40 or within 69.40, and you see the price breaking higher, you should know that the price is has got a bullish bias, so you can expect the price to move higher, so you can go for a buying opportunity. So another thing to take note about our report is whatever the levels you use, okay, do take note that when you use stop loss, you have to use plus minus 5 pips, because different brokerage firm use a different spread. So as a result, like for example, if you want to buy, then it can be it will be safer to buy when it breaks 69, 90 or even 95. Then you know that the price is moving higher. And if you have bought or long, we have in fact 4 levels, right, to book your profits. The levels would be resistance target 1, which is 70.10, 70.50 or 71.50. These are the 3 levels for you to book your profit. And the 4th level would be your U-turn zone, which we call it a zone 5. Most of the time, when the price reaches the zone 5 levels, you feel that the price would struggle to clear that barrier, right? If it's a resistance zone 5 or support zone 5. So this would be the levels also to book your profit. So in other words, you take a trade when it breaks resistance zone 1, if you are bullish and the price moves higher, and you book your profits at 70.10, which is, if you notice that, that gives only, there is an immediate barrier of another 20 pips. So if you want to take that trade, you know that, okay, the price has to move higher. So the next one would be a better trading opportunity, which is 70.50 or 70.70 or 71.50. And also do take note that your previous resistance would become a support when the price tests back the levels. That means, for example, if the price has moved to 70.50, so if let's say you have missed your buying opportunity, then when the price falls to 70.10, then that would be a re-entry level for you to consider. That means if you want to take trades. And also do take note that our levels is quite valid when the first time it touches and holds. The second time, chances are it may give way, and as a result the market may continue it towards the directions which it's moving. So all in all, this is what you need to know about our report. And we have a minor levels which are zone 2, zone 3, zone 4. All these are minor levels whereby you can use these levels for entry or putting your stop losses. So that's it, and that's how you use our report to take your trades and do it accordingly, right? So now let me go and show you this particular example, and after that I'll answer your questions. So in fact, for this particular example, if you notice, other levels which is 69.90 and 69.40. So I have my immediate resistance level which is 70.10 and 70.50. So let's see what has happened on the chart and how can we look and take the trade opportunity on this particular instrument. Okay, let me show you this. Okay, this is a 2-hour chart on this New Zealand USD. So if you notice, the market has been consolidating for a couple of hours. In fact, since for the last 2-3 days, So as a result, you should know that, if you have long now, chances are, it is going to consolidate until it breaks. So if you notice, the high it is registered for today, which is 70.05, and the low is about 69.60. Okay, if you recall, our support zone 1 was 69.40, and I told you that if the price is trading, if the low is above this level, as long as within this level, and once it clears that that 70.05 or even 70.10, the price should go higher. And also do take note that once the price breaks above 70.10, we have the immediate previous high, which is 70.30, right? So as a result, these are the levels you have to pay attention, or you have to wait for the price to clear that barriers for you to see higher highs. And once it clears 70.30, then you should know that 70.50, 70.70 and 71.20, these are the levels whereby I would pay attention for entry, booking my profit, whichever way, So as a result, I know that, okay, I pay attention to the price levels so that I know that, okay, this is what I'm looking forward to and this is how I make my trade. So as a result, I know that my emotions are at bay, and at the same time, I can start working out my risk reward being, like, for example, if I'm going to take my trade now, if let's say I assuming that, if let's say once it breaks, so I should know that my risk versus reward doesn't justify, because, I know that my immediate barriers are at 70.30 and 70.50. So you, you can take the trade, or you can let go the trade and wait for a better trading opportunity, or another instrument which gives you a better trading opportunity. So that's how you use our report to take your trade decisions, at the same time for entry, exit, and stop loss, right? So now I'll answer your questions. Analyze the pound dollar on a 1-hour chart. Okay, the question is pound US. What do you think on a 1-hour chart? Let me go back to that screen. Okay, this pound US, if you notice, it has been on the 2-hour chart. It is also consolidating, and overall it is not given a break anywhere. So if you notice, it has been looking at, it has been a downfall and it has been consolidating. So overall, what I feel about this instrument is, okay, this upside is going to be limited, right? So in fact, the zone 1 levels for today is 156.95, 157.20. That means 156.95, 157.20. This is our resistance zone 2, and this is a resistance zone 1 level. And the support zone levels are 156.25 and 156 level are the support zone 2 levels. So overall, if you go on this particular instrument, okay, let me show you the screen. So these are the levels I would like to pay attention to. In fact, the resistance zone 2, which has happened, that means the high was yesterday, right? So what I feel about this market is, it is going to be a range trading until it gives you a clear signal on the 2-hour chart. But any move higher should be an opportunity for the best, because overall is, on the 2-hour chart, okay, what it is telling you is, it is not, it has been consolidating, right? So I think, the high should be limited towards, even that 15850 or below that 159 level, right? So these are the levels I would like to pay attention if you want to take a trade on the bearish side. But right now, as it is consolidating. So if you want to take this trade, what you should be doing is any trades, like you have to be very nimble, meaning in the sense you have to take your book your profit 30 pips or 50 pips, whatever is it, book your profit. Okay, give me a minute. For this, so my apologies on this because of this technical problem, right? So to give you back this again, I told you, okay, this is no, can see, the thing is, I'm just pointing the cross. Okay, there's a cross. Can you see that there's a gray line? So that is the cursor there with the number, right? So so this is my view on this particular instrument, right? Okay, the next question is further clarification about zone levels. Okay, I don't know. Okay, can we analyze pound dollar 1 hour? I think which I've already discussed on this instrument. Okay, the next question is USD Swiss 1 hour and USD CAD daily. So if you are looking on the USD Swiss franc on the 1 hour, okay, this is the chart. Again, this is a similar picture. What I feel about this instrument is it is also consolidating on the 2 hour chart. But what I feel on this is you see on the 2 hour chart, okay, it has been moving higher. So if you see the channel, right? So the price has been moved higher. So as a result, I feel that the price or the bulls may find resistance a big barrier at 109.35, and of course the final move that would be at 11180 or 112, right? So this is the view. So what you should be looking at for this particular instrument is right now it is consolidating. Wait for the break to happen. Once it breaks this high, then you expect the price to move higher. And the next level to pay attention is which is 109.40 is where which is about another 180 pips. But if the price moves lower to near that 106.90 level, then you can have a cautious buying approach, meaning in the sense, because this may be the high which we may not know, because this is still too early for us to conclude that the market has reversed, but the price is exhibiting some divergence, which is also showing you or displaying that the high may be limited. So as a result, what I would want you to do is, what I would want myself do is, I would only want to go along or buy with cautiously, meaning in the sense, and in fact our resistance zone 1 levels are 108.05. So 108.05 and 108.25. These are the two levels which is a prior high. So that means once it breaks 108.30, chances are you can have another at least about 70 to 100 pips move. So this is the a game plan you need to use or apply on this particular tool. But you have to be very cautious, because you should know that the price is in a range trading, and it is showing divergence on this particular instrument. The next question was USD Canadian on a daily chart. So if you look at this instrument on this USD Canadian on the daily chart, what I feel on this particular instrument is, okay, it has come down. Okay, I feel that the downside is going to be limited, okay, towards that 10415 or yeah, about 345, right? So 10415 and 10345, these are the two levels you can anticipate the price to bottom or stable. Then you can see the price having some pullback. So again, for this instrument, if you notice on the 2-hour chart, it is been consolidating, and what I feel is this downside is going to be limited. So if you feel that it's exhibiting divergence, so the downside is going to be limited. So 10415 and 10345, these are the two levels, or even 10370. These are the three levels I would want to pay attention to see a reverse or the bulls coming back into the picture. So this is my view on dollar CAN. The next question is, how do you find these levels? Okay, I told you earlier on. Okay, the tools which we use mainly are Fibonacci numbers, GAN numbers, trend channels, pitchfork, moving averages, right? So we use these numbers. We use these tools to get these numbers, and of course, if you are a technical trader, you should understand or accept the fact that how does this technical tools work? Because you must understand that we are working on supply and demand, meaning we are the price moves wherever the crowd moves. That means where the majority crowd moves. So as a result, different technical traders, they use different tools, and they believe, and they use the tools to use their trading decisions. So what happens is, sometimes the moving average will take in control, meaning when the moving average would play a significant role in market turning, or market turning point or market reverse. Sometimes like a trend channel will play in make a role. Fibonacci plays a role. GAN numbers plays a role. Pitchforks plays a role. So on and so forth. So when we use these tools to get these numbers, so as a result, you can see that these numbers can be reliable most of the time, because most technical traders use these tools to take their trading decisions or do their analysis. The next question is Euro USD on a 2-hour chart. So this Euro USD on a 2-hour chart, if you notice, is a similar picture, right? And it has been consolidating. So right now, the message is the message is not clear, or the signal is not clear, because it may have that bottom, right? But right now it is still too soon to conclude, because if you notice on the daily chart, the low which happened on the 5th February, which is 135.85. In fact, it tested again on the 12th, but it gave up towards the closing. So if you notice on this particular instrument, coming on the 2-hour chart, okay, what we believe or what we expect is the price may have bottomed, but it is still too soon to conclude. But if in the event, if it's not bottom yet, then chances are, the levels to pay attention, or the levels to consider is 134.45. That's where I see the bulls might come back into the picture, or another immediate levels would be 133.25, 40.45 level. Yeah, 133.40 level. Okay, of course, the major turning point for this entire move would be about 128. But of course, this is too soon for us to conclude right now, because we may not know, the price may reach that level, but we have to wait for the price to give us a signal as we go on, right? So, and we should always remember that we should always trade the market, and not your expectations. So whatever the market gives, take it, accept it. Okay, this is what is happening. So when you do that, chances are you would be following the market most of the time, and you would make a better trader in the long run, right? Okay, the next question is, how do you plot the trend channels? Okay, in fact, the trend channels, I have my own way of doing things, and there are about 10 to 12 ways we can draw a trend channel. So that is, in fact, plotting a trend channel is a very complex topic, because all you need is, to get a trend channel, all you need is 3 points to plot a trend channel. Two for a trend line, and the third point for a channel. So there are a number of ways you can do, but the most difficult thing is identifying these points. So that itself, you need a lot of skills, but it's not, because if you notice, there isn't any a specific rules you can find to draw a trend channels or a trend lines. So it has to come from experience, and it has to come in the long run. So as we go on, we would be guiding you and using this. So as a result, to make things easier for you, that's where, we have done all those numbers. So you can use these numbers and take this trade. So it's all, it's up to you to decide how you want to take your trading decisions. Any other questions you want to discuss? Because, excuse me, being a dull or quiet session, what I would suggest is it's best for you to wait for the break, or wait for the Europe and the US sessions to come. Then you can put in your trades. Any questions, or any particular market which you want to discuss or you want to see? I'll be very glad to answer your questions, or we can discuss. Feel free to ask. The question is, can you show trend channels on a chart? See, as I told you, plot trend channels on a chart. It comes from experience. Okay, first thing is, you must know to choose the right time frame, right? Because different trends, when you plot a different trend lines on a different time frame, it gives you a different analysis or different projections. Like for example here, if I use this on a 2-hour chart, like as I told you, I can draw a channel from here to this, which is a immediate a channel, right? So, but again, when I use on a 5-minute chart, I can draw a different channel here. If you notice here, the price has been consolidating and it is moving horizontally. So I can draw a channel from low to low with here, with this high as a projection. So if you notice, so that 137 should be a barrier for the bulls to clear, right? So this is as I told you, so it is not a topic that a very easy topic discussed within an hour. We can discuss as we go on, but I feel it takes a lot of time and a lot of experience for you to get this channel drawn correctly. So because different time frame would give you a different channel. So you must know what time frame you are following and what time frame you are taking your trade. So that what makes you a difference between a valid trend channel and invalid trend channel. Because you can draw numerous trend channels, but as you go on, the more you draw, the more complex your channel or your analysis would become. So that's what I do is, because I use the report for me to make things easier for me and simpler. Because when I use, all I know is when the price breaks the zone 1, okay, then I know that the price is going to go higher. Like early on, I showed you that New Zealand US. Okay, let me draw you the channel, then you can see for yourself. See, like if you recall, I told you that 170 30, I think 70 10, yeah, 70 10 was our resistance target 1. So if you notice, 70 10 and 70 30 was our previous high, right? So if you notice here, if I draw a channel 70 20, there is a channel where there is going to be a resistance on this particular scenario. So the next level is 70 70. If you recall, okay, early on I said that 70 50 70 70 U-turn zone, maybe I can show you that report again, which is, let me show you that screen again. If you notice this, 70-70, okay, here there is a U-turn zone, which is our zone 5. So again, if I show you on the chart that 70-70 here is the second channel, right? So as a result, you feel that this channel might be a barrier for the bulls. So you can expect some pull down to happen around this level. Okay, the next question is, how much do you charge for your service? Okay, what I suggest is you go to our website. Okay, we have different reports. We have, in fact, right now as it is, we have 4 types of reports. We have FX 1, 2, 3, 4. But towards the end of the month, we are planning to put in another 9 reports. So altogether, there will be 13 reports. So what I would suggest is it varies from the region of about 100 US, so on and so forth, and depends on how you make the payment and the kind of stuff. So what I would suggest is you get our website, which is precisetrader.com. Okay. Thank you very much. Okay, I look forward to see you again. Goodbye.